In today's video, I want to touch on a company that is high risk, but also high reward. According to select analysts, this stock could go up by over 150% in the next 12 months. Now, with these types of companies, of course, high risk, high reward, you are, of course, and by the way, this is a company that does not generate revenue as of today. So yeah, you're buying it based on what management told us, based on what the competitors are generating today and what the market basically implies in that industry. The company I'm talking about is Vikings Therapeutics. Some of you might have heard about it, some have not. So Vikings Therapeutics right now has a market cap of $4.78 billion with zero revenue. Year over year, the stock is already up 134.6%. If we zoom out a little bit more, in the last 5 years, this stock is up 439.5%, with of course the big jump happening at the end of 2023. Now, if we go back to what happened last year, we can see that the stock went up 80% after the company posted phase 2 results for its GLP-1 GIP dual agonist VK2735. We're going to talk about this one and another one throughout this video, but basically when this was posted, the stock jumped 80%. So of course, a huge gap. Right now, we can see that the gap has been filled. So we're basically back to prices near where the stock was before these phase 2 results were released. Of course, from a revenue standpoint, nothing has changed, right? They still generated $0 in revenue. But if we can look at some of the competitors, Eli Lilly, Novo Nordisk, right? With these types of companies, we can see that they are generating quite a lot of revenue thanks to GLP-1. But Vikings Therapeutics is not just GLP-1. So let's talk about all of that. I'll repeat it, high risk, high reward type of stocks. So of course, if you allocate accordingly, because yes, there is a chance that this becomes I won't say nothing burger, a $0 company, no, but chances are that at $4.something billion in market cap right now, well, there's still quite a lot of risk, even though the stock is back to prices before the phase 2 results, just so we're clear. If you enjoy this type of videos, hit all the buttons, like, subscribe, all of that, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Currently, there are 15 analysts covering this company, 6 with a strong buy rating, 9 with a buy rating. And as you can see, the average analyst price target sits at $110, representing 156.4% upside than the price we're at today. Now, let me give you a little overview here. So, what do? They have multiple solutions. They primarily focus on NASH, obesity, and related conditions. NASH means non-alcoholic steatohepatitis, which in simple terms is this: liver inflammation and damage due to fat buildup not caused by alcohol. So we've got a couple of solutions here. We've got a lot of numbers, just the names of the solutions. VK2735. So this is the basically weight loss drug that they're working on, the equivalent of what Ozempic, Wegovy, Mounjaro are. Then we've got VK2809. This is this one right here. Elevated levels of fat in blood, increasing risk of heart. So they want to tackle that. We then got VK0214. This is basically a solution that would tackle the rare genetic disease affecting the nervous system. But of course, the big money and the big attention comes because of the GLP-1 solution, or in this case, dual GLP-1 and GIP receptor agonist. Of course, with these types of companies, still pre-revenue, there should be a lot of focus on efficiency, safety, and route of administration. You have to go through 3 phases: phase 1, phase 2, phase 3. So Vikings need to demonstrate advantages of VK2735 over existing treatments. Example, a better weight loss, fewer side effects, and oral formulation. That's basically a big selling point here. This is an oral solution. Right now, no revenue, so remains to be seen how long, well, it will take them until they get to market and start generating some revenue. Last quarter, we basically got this. Total operating expenses went up by 35%, net loss by 10.6%, and shares outstanding went up by 11%. Of course, zero revenue. In a presentation, they did show us a couple of promising things with regards to the solutions that we just went through. So we've got here VK2735. You can see that phase 2 has been completed. Same with 2809. Phase 2 has been completed. What did they tell us back then? Potential data events expected over the next 3 to 6 months. 2735 oral, additional phase 1 data in healthy subjects. So you get even more information about these subjects here in phase 1. The longer this goes, the more time, the more results we will get. And then for VK0214, phase 1b data in X-linked, extremely long name here. Now with the weight loss solution, what has been interesting is this one right here. All doses, statistically significant versus placebo starting in week 1 and maintaining through week 13. Dose-dependent effect observed, and no evidence of plateau suggests further body weight reduction possible with continued dosing. So as we go through week 14, 15, 16, etc., it's going to be interesting to see if they continue to lose weight. Then we've got new data from the oral VK2735 program. This was released November 4th. So what do the results show? Well, it shows us the following thing. Nausea is the most common adverse effect, especially at higher doses of VK2735. Vomiting, diarrhea, and constipation occur less frequently, with no clear dose-dependent trend except perhaps for constipation, which shows some increase at higher doses. And then the incidence of these adverse events in the VK2735 groups is generally not significantly higher than in the placebo group for most events, except for nausea at higher doses. So yeah, these are promising results. And then if we go and look at the main competitors. First of all, Goldman here said that obesity drugs are a potential $100 billion opportunity by 2030. Lilly Novo Nordisk may control 80% of obesity market in 2030. If we look at the numbers right now for both of those companies, one here shows total GLP-1 revenue, the other one shows diabetes revenue, which, might not be 100% the same, but you can see that they're generating multiple billions of dollars of revenue. Eli Lilly generated $26.16 billion in revenue last quarter, and Novo Nordisk generated $21.61 billion total GLP-1 revenue last quarter. And of course, as you can see, this is growing quite quickly. So let's say in a year or 2 or 3, Vikings does succeed to go to market, because remember, these phase 1, phase 2, phase 3 do take a long period of time. So even if they can get 10% of the revenue that these companies generate right now, that's still quite a lot. Now, of course, at the moment, you will have a company that generates zero revenue. So I know it's not for everyone, even me, buying pre-revenue types of companies. That does come at a risk, because for the stock to move, it will basically move on catalysts, might not really move on financial fundamentals, because, well, there is no revenue. So it will move on maybe buyout rumors, something that has been, floating around for quite a long time. So buyout rumors could be a catalyst for this stock. More information on certain phases here, phase 2, phase 3, etc., more positive information, as we've seen last year. Stock went up 80%. That can be another catalyst. So yeah, those are the types of things that you should be looking for with these types of stocks. And then, of course, once they start generating revenue, then of course we are in a different phase of this company. But right now, buying this is basically high risk, high reward. If it works out, great. If the catalysts do happen, buyouts, good results, then yes, the stock will probably move quite quickly. Because remember, we're now back to prices pre-phase 2 results. I'm not saying that we have to go back to $100, $110 just like that. No, but in my opinion, it just makes a little bit more sense today than it did probably a couple of months ago. Now, maybe we are still in a honeymoon phase type of thing after the US election, still in a bullish market. Maybe that might change. going into the next earnings report, and then the momentum gets completely destroyed and this stock might go down even more, might even revisit here the previous top at around $25 or so. Yeah, that could definitely happen. So that's about it. It's a very interesting company and pick because of, well, the industry that they're operating. You have to know the risk. You definitely have to know the reward as well. So what do you think? Do you think it's worth taking the risk? Let me know down in the comment section below. At the moment, I have no position in the company. That might change in the future. So let me know your thoughts down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.